XRP stays strong while the market is in full panic. Now, if you're a Bitcoin or Nvidia bro, I'm just going to put out the trigger warning right now. You might cry a little bit after we make fun of you here today. So I don't want to hurt anybody's feelings, but we do got to talk about it, folks. A market that is in full panic. The front page headlines across all of the financial market news platforms trying to justify Nvidia. Nobody panic. Down 3 days in a row, down 13%. Nobody panic. Bitcoin below 60,000, down 20% from the peak that we just hit. Officially in bear market territory. Nobody panic. $9 billion worth of Bitcoin going to be returned to the Mt. Gox holders that lost their Bitcoin in the Mt. Gox hack. Yeah, they're finally getting paid back in Bitcoin. Basically pennies on the Bitcoin in this case. But nonetheless, they're getting paid back. It's a lot. It's sell pressure. But the Bitcoin bros were in full panic, and I was listening to them today. It was pretty hilarious. Let's get right on into it, though. We got more to talk about than just that. And if you appreciate what we do, please make sure you guys have subscribed, hit that notification bell so you don't miss any of our updates. Starting off, I don't know if this has been confirmed yet, but we are getting reports right now that the Lockbit ransomware group has hacked in to the Federal Reserve. We're about to see if this actually is true, if this gets confirmed, what comes of it. But we reported on cyber attacks yesterday with the car dealerships getting hacked. There's also basically the platform that got hacked for the car dealerships. They actually do a lot of payroll too. I was reading up on that. So there's a lot that's coming down right now in the form of cyber attacks, systems going down. And so in this case, this is the Lockbit ransomware group announcing a hack netting them 33 terabytes of juicy banking information containing Americans' banking secrets. And apparently they were offered $50,000. This could get very interesting. It absolutely could. Now, the reason why, the banks, in this case, the Federal Reserve, might not have too much to offer up is because the banks aren't sitting too pretty right now. We don't need the banks to get hacked to know how bad their situation is. We just look on what they're reporting. Their unrealized losses on investment securities now equates to $525 billion. Now, the good news for them is that they actually reined this back in. It was nearly at $675 billion at the end of last year. They've now been able to cover some of that, clean up the balance sheet, and they've brought that number down to $525 billion, but over $500 billion of unrealized losses at our banks. Now our cyber attacks taking place. And wouldn't that just be the perfect excuse, right? A little cyber attack to wipe the record clean, to fix some issues that they have, right? And then on the backside, what do you do with gold? That's right. You already know the deal. Hey, speaking of precious metals, if you guys are looking to pick it up, you want to stack some of the shiny pet rock that I got, well, you guys can do that at my website, ZachRector.com. We got you covered over there. And we know that the central banks have been buying at a pace that we haven't seen in 50 plus years. Into the stock market, the Dow looking like it's ready to gap up to the 125-year trend line. This is from Finance Lot. Let's take a look at these charts here. So this is a 125-year trend line for the Dow Jones. Pretty incredible. And you can see this wedge that it's been trading in now for a while, going back for a very long time. And this snapshot right here, this chart that we're looking at, just goes back to 2020. But this broader top side trend line goes back 125 years. It's really incredible. All the way back here to 1899. Truly incredible. And that wedge up here at the top, right, that's where we're at right now. That's where we just looked at. But you can see this base that's formed since the dot-com and the 2008 crash. How low are we going to go? How low can you go? I feel like that's a song by Ludacris or something. You guys let me know in the comments down below. Speaking of Ludacris, I saw... This is so stupid. I just saw that Ludacris, his concert got canceled, so he went to a grocery store or some mall or something and put on a show. I just thought of that. It's so random. But anyways, back to the financial markets. He says the Dow and the Russell 2000 have vastly underperformed the NASDAQ and S&P 500 over the last 3 months. The next leg up to complete the blow-off top will likely see money flowing from mega caps to the highly speculative micro caps. We're about to see some crazy price action over the next 60 days. Now, the thing about it, guys, is the NASDAQ and the S&P have been overweight on the tech stocks like Nvidia and others. We know that. and you have the Dow Jones and really the Russell 2000, which covers the small and the mid caps. Okay, a lot of the smaller companies. And so we're now starting to see a trend. I even saw it today. Warren Buffett starting to pick energy companies. He's adding some of those to his balance sheet. And so we're starting to see some moves being made here by the broader Wall Street and investment firms that have been taking profits. I was just listening today to a clip from Stanley Druckenmiller, famous Wall Street hedge fund investor. And this is from 1 month ago. And it just popped up into my feed while I was listening to something else. And he's talking on how basically AI, the play's already been made. The profit's already been made. You can't be greedy. And so these guys, the top Wall Street hedge fund managers, they've already been taking profits, and they currently are right now. We've been showing you how the insiders have been taking profits as well. They are offloading these, these stocks that have been driven by AI and this broader hype that have been at levels that the valuations just simply can't be justified. And so what any good trader would do is just take the profits and move on into the next play. The thesis played out. You take your money and run. You don't stay around and hang out in there. And so we're going to continue to watch this, but you can see it on the front page of Bloomberg. NVIDIA's 13% stock rout has traders scouring charts for support. And like I said, they're in full panic trying to find support on the technical analysis basis. They know they can't justify it from fundamentals, right? Down 13%, 3 days in a row of selling off. That was Bloomberg. Let's go to Market Watch. Same thing. Is NVIDIA doomed to be the next Cisco or Intel? Here's what investors need to know. And it's just like annoying at this point. I look at, Market Watch, Bloomberg, and I'm trying to see, what's happening in our financial markets. And it's all this, let's cover for NVIDIA. Let's cover for these, overvalued stocks. And the most recent one that they pumped up was Apple. And they did so based off the AI narrative once again. Oh, Apple's going to add, basically all they're doing is adding Chat GPT to their operating system. Nothing fancy, nothing incredible. And meanwhile, the insiders have just been offloading these shares from NVIDIA, Apple, Tesla, and others. And so, once again, the smart money has already been in these stocks. They're already taking profits, but they juice up these narratives on CNBC and the talking heads, right? Oh, Apple, AI. And these platforms come out, these companies come out and they say, oh, so-and-so is going to leverage AI. Stock pumps, and then they dump on you. We just saw it with the Roaring Kitty of the GameStop saga. Roaring Kitty's back. He leaned up in his chair. Everybody gets excited. And it did pump 40%. They had to do, 40 stops in one day on GameStop and AMC? So they get it all jacked up. And then what does the CEO of GameStop do? He dumps $4 billion worth of shares on the market. And he raises $4 billion cash. Well played. Well played. And I really question if Roaring Kitty, who's gotten to him. He's gotten to a level where he moves the market too much. Somebody's had to have gotten to him. And the fact that the CEO of GameStop, Ryan Cohen, took advantage of the Roaring Kitty opportunity to dump $4 billion. And obviously the GameStop guys would say, oh, he's able to sell $4 billion worth because there's so much interest in GameStop. There's so many people that want to own GameStop. And maybe that's the case. Hey, somebody paid him $4 billion, right? But the fact remains, guys, as excited as we want to get about all these stocks and all this, one thing remains the same, which is eventually you come back down to fundamental valuations. Fundamentals aren't as sexy. They don't get everybody as worked up as decoding the technicals. But the fundamentals remain true, and we always come back to them. And so I'm happy to watch NVIDIA from the sidelines. I'm happy to watch Bitcoin from the sidelines because I can't justify their valuations. I can't understand why they would go higher other than more fools coming in and buying that bag from the insiders that are dumping on them. And when we're talking about, getting dumped on, in the case of Bitcoin, what we're watching right now is the Mt. Gox. The Mt. Gox investors are being made, well, not whole. They're getting pennies on the Bitcoin. Bitcoin plunged over 5% today amid confirmation that bankrupt Mt. Gox will begin $9 billion in Bitcoin repayments in July. Marty Party adds to it, confirmed by Reuters. This is under Japanese law, like FTX, Mt. Gox creditors will get $483 per Bitcoin paid in Bitcoin. That's 0.008 BTC per Bitcoin held at the time. The 9 billion becomes only 72 million paid to customers. So what's happening here is if you had a Bitcoin on Mt. Gox, you are going to get paid $483 per Bitcoin, which I'm assuming was the price of Bitcoin at the time of the hack. I'm pretty sure that that's what the case was, is it was about $400 to $500 at the time of the hack. So basically, you're getting paid back the equivalent in dollars in Bitcoin, which is 0.008 Bitcoin per Bitcoin held at the time. So what would have been 9 billion actually only becomes 72 million paid to customers. Now, will the exchange, the attorneys, the government of Japan keep the remaining Bitcoin? Will this save the yen? We'll have to see about that one. You know, this is a very interesting case. Once again, we bring it back. Where's, Jed Michaela was able to escape free out of that one. Interesting how that one worked. Just an interesting whole deal there with Mt. Gox. But nonetheless, they're finally getting paid back. Pennies on the Bitcoin. And it is going to add to the broader sell pressure. One thing, too, that I heard mentioned in the Bitcoin space today, along with a lot of coping, nobody worry, nobody panic. A lot of these guys are probably just going to be hodlers, right? They're just going to hold on to their Bitcoin. Yeah, okay. You're telling me an asset that, your cost basis is a couple $100. It's now sitting at, it did drop down to 59,000 today, but even at 60,000, right? I think that some people might be taking some profit. But I did even hear one theory suggesting that, market manipulators actually push down the price of this Bitcoin, so their cost basis on this Bitcoin when they receive it will be less, and then they'll be able to, ride it back up. Is one of the theories that I heard thrown out. But you guys let me know in the comments down below what you think. I wanted to bring up, though, the fact that the market was down, Nvidia's down, Bitcoin's down, everything's down. And yes, XRP did go down today, but the base that we have on this sucker is as strong as could be. Now, critics would say that's because we haven't gone up. We haven't done anything. XRP's been, quote unquote, dead, right? It's been stagnant. It's just been riding out sideways. Well, the good thing about that, right? I'm here to give you the good news, is that we didn't get cleaned out in today's market flush and the bloodbath that we saw in the markets today. XRP did come down for a quick wick to 46 cents, immediately got bought back up. But you're seeing this base really holding really strong. Now, I had this trend line back here. We did come back down to this trend line in April, which was a quick wick to 40 cents. But this is the thing, is that we've already cleaned this out. And we showed you guys on a couple episodes ago the charts on XRP and Cardano, because they're so heavily shorted, right? We've already cleaned out so much of this that base remains so strong. And when we look at the fundamentals, I'm not going to go into it on this episode. I do that every other episode, and every single day I talk about XRP fundamentals and how great they are. But from a technical basis, our base is so strong, right? And we got a long, drawn-out base, whole lot of suppression, and this thing, I mean, it just is primed, right? And like I said, what's the smart money doing? The smart money already took profits on Nvidia. They didn't need to sell the absolute top, right? They already rode the wave up, 5x, 10x, whatever they did on Nvidia. They took their profits and they're rolling into the next opportunity. Same thing for Bitcoin, right? Bitcoin already went up, and we see this typical of the halving cycle where we get a run up pre-halving. This time we went to new all-time highs before the halving. We've never done that before. History was set for Bitcoin. And I said, watch it. And when we look at Bitcoin, I mean, you see, this is just very common. This is a 20% pullback from the all-time high that we just hit. So Bitcoin did officially enter, I'm going to measure this one out for you, down 20.86%. That is a technical bear market. That's a technical crash for the traditional stock market. Now, for crypto, is this a bear market? Is this a crash? This is really just another day in crypto. For Bitcoin, though, a slower moving beast that Bitcoin is, 20% is still very significant. But nonetheless, I'm not going to say that Bitcoin has entered a bear market. I'm not going to call this a crash. But the point remains, you see how much we got cleaned out here on Bitcoin. You see Ethereum took a little bit of a hit as well. But then I just pull back up this XRP chart and we're just chilling. Incredible strength. We did get that wick up to about 75 cents. That was back in March. So you can see, this thing is very volatile. And when it does go, it goes. But I just love that we've built this base. We've built this support. I obviously would love to see XRP, over $1, over a few bucks, $5, $10. You guys know what my targets are for this thing. And I'm going to be holding this sucker until I see my thesis play out. But the point that I was trying to make in this episode is that while the rest of the market's in full panic, we're in a fundamental thesis. We're in a fundamental position that we can be comfortable in. And there's no panic over here. In fact, any pullbacks that we are getting in the market, we're taking that opportunity to buy more of these assets. So, not here to give you financial advice, but I'll tell you right now, I'm as happy as can be in my investment. I didn't buy the dip today. I'm not actively deploying more capital to cryptocurrency right now in any sort of major way, other than I did add some to the AMM. If you guys missed that, go check it out on my YouTube channel, XRP AMM tutorial. Full update for you guys there. And with that being said, I'm going to wrap up this session. You guys let me know in the comments down below what you guys are thinking about these markets. And I will see you guys in the next one. Everything's at my website, ZachRector.com. God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.